let's move on to Netflix. They had their earnings yesterday. And it was a beat on both revenue and EPS. Revenue beat by 0.68% and EPS beat by 1.82%. But they actually missed on their guidance. Their guidance. This was before the split. That was yeah. So they missed on their guidance. But they did have positive guidance for next quarter. So
Interesting. Okay. Yeah, it doesn't make sense why their stock price would have gone down. They also based on the results, right? It makes sense to me that their stock price would go down because they've started to get a little overvalued, which is why I had sold my shares. And after I sold my shares, I watched it run up. I think my last shares I sold in the 800s before the 10-for-1 stock split, so maybe in the 80s, maybe in the 90s. I don't remember the exact price. And of course, it went all the way to 120, 100 and mid 120s. But like as often happens, the pendulum swings one way, then swings back down the other way. Um, in Netflix's case, it might just be, it might not even be like corrected yet. It's about the right price point for a company that size that's growing at, what's its growth numbers look like right now?
revenue grew 15.8% and EPS grew 27%.
Okay, and it has a PE of 33. So, it's basically those numbers right there are identical to, let's say, a Google. Similar growth rate, similar PE, um, despite having been down, despite the Netflix's stock being down as much as it has been, down to 85 from like
Which
what
is funny because
last time the price
it's basically at its 52-week
low
all-time low. Well, not
or
all-time low,
52-week.
52-week low.
Yeah. Um, so that goes to show that like basic at this price, it's similarly priced to Google. So um, it's not super exciting. It's not growing way faster than Google. It's um,
Right.
I would like I have passed on it because for me, Meta is even more exciting than both of them, both Google and Netflix, growing faster, lower PE, and then the AI investments are all gravy. They're
Right.
not even being counted.
And not that this necessarily matters, but from a narrative perspective, like FANG is not a thing anymore, where it was a part of that like core group. It's now the Mag 7, which it's not included. So
Wait, Netflix is not part of Max 7?
no,
Okay, what are the Max 7?
now you're
Obviously,
going to test
Apple,
me.
yeah,
Apple, Google,
Microsoft,
Microsoft, Tesla,
Amazon, Tesla,
Amazon, Nvidia,
Nvidia.
and which one am I
I thought
missing?
it's Netflix,
No,
right?
I don't think so.
Maybe we got to look this
Yeah,
up.
Google it.
Mag 7 companies. Um,
Which one are we missing?
Tesla, Meta, Nvidia, 1, 2, 3, 4, 5, 6. Oh, I guess Apple, Microsoft, Amazon. We said all of them. That is 7.
Oh, so we just don't know how to
We just
count.
don't know. Yeah, exactly.
Okay, cool.
So Apple, Microsoft, Amazon, Google, Tesla, Meta, Nvidia. That is 7.
Okay.
Wow.
And
That's
this is a prime
yeah.
example why
Why you should not
everything we
listen.
say is not investment advice.
That's
We somewhat know what we're doing, but not fully.
yeah.
But yeah,
We
so
got
anyway, they're not a part of that core group anymore. They haven't been for a while. So to me, I believe in that like larger narrative. So it just makes them
right.
slightly less attractive, even though that has
Yeah.
nothing to do with their actual business or metrics or anything. Um, the other piece I wanted to
Well,
hit on is
yeah.
they just updated their deal with Warner Brothers, where
Oh yeah.
originally they and Warner Brothers accepted their offer. And the original deal was it was going to be mostly cash, and then I think for it was maybe like $27 $5.50 a share, something along those lines. But $4.50 of that was going to be of Netflix stock.
Rock.
And they changed their offer to be all cash.
Yep.
Why they did this? So I think there's two reasons. One, without having that stock component, it dramatically reduces the paperwork needed to close the deal, and they could actually close this deal a lot faster.
Mm.
Like optimistically, they can close it within the next few months.
Okay.
The other piece is Paramount has put a lot of pressure on Warner Brothers and Warner Brothers shareholders for their hostile takeover bid, and they've actually taken Warner Brothers to court over this.
Mm.
Um, and the courts, I don't think are buying any of their arguments. Netflix definitely won the bidding war fair and square.
Okay.
Um, but this does change my POV where originally when we talked about this, I was leaning towards this deal not going through. The fact that Paramount is being so litigious makes me believe that they think the deal's going to go through.
Otherwise,
And
they would just wait it out.
exactly.
Yeah.
So I think there's a good chance that this actually happens. And
Hmm.
Netflix is just making the path even easier now with it being all cash.
Let me ask you something. Do you think that Netflix could grow a lot faster if it had access to all this HBO content and other things in this deal?
It's hard to say. I don't know. I mean, it's Netflix has already had a ton of growth, and I think that's part of the problem is the growth
Right.
is going to start to slow down as you kind of capture the entire market.
Right.
So I understand why they're doing this. It also will create a new revenue stream. I mean, like Warner Brothers had a killer year in 2025. They made a ton from their movies. They had some of the I think Minecraft was 2025. Like
Mm.
they, there's a lot of money that Netflix is leaving on the table. So I don't know if it's necessarily going to increase their subscriber base, but it should increase their revenue dramatically, especially if they could really focus the Warner Brothers studio.